Bitcoin is the most well-known cryptocurrency overall, and still by far the most important. In terms of market capitalization, Bitcoin is significantly ahead of the competition, and in terms of value development, no other digital currency can compare to Bitcoin. With over $700 billion, Bitcoin's market capitalization in May 2022 is far ahead of Ethereum, Cardano, Binance Coin, Tether, and Ripple. The price performance of the most important cryptocurrency is also unique. In 2016 alone, the Bitcoin price climbed by more than 125%, reaching highs of nearly $20,000 in 2017. After the Corona crash in March 2020, the price of the most significant digital currency climbed. For months, the value of Bitcoin multiplied to almost $70,000 at times. From its all-time high in November 2021, the price declined and has been moving in the range of $36,000 to $48,000 since early 2022. Those who trade Bitcoins and closely monitor the Bitcoin price can potentially make a fortune with a bit of luck. In the past, the most successful cryptocurrency has made one or the other investor a millionaire. Bitcoin is often referred to as digital gold by crypto enthusiasts, and the parallels are undeniable. Both gold and Bitcoin share the common feature of having limited availability. Unlike fiat currencies, gold, as a natural resource, exists only in certain quantities, while the number of Bitcoins is capped at 21 million. This limitation, an idea conceived by creator Satoshi Nakamoto, is intended to ensure the preservation of the cryptocurrency's value, which is particularly important in times of crisis. At the onset of the COVID-19 pandemic in 2020, Bitcoin seemed momentarily unable to fulfill its reputation as a crisis-resistant asset, as its value plummeted sharply to below $5,000. However, the coin remarkably rebounded and reached peak values of over $60,000. Although the Bitcoin price has since experienced some fluctuations, it has established itself as a solid investment opportunity. Do you also want to have a piece of the pie and not leave all the Bitcoins to the top 5 richest Bitcoin investors? But are you unsure whether buying Bitcoin now or waiting makes sense? Many investors are faced with the challenge of protecting their savings in a time of inflation, low interest rates, and volatile markets. While traditional investments lose attractiveness, buying Bitcoin now emerges as a serious alternative. Crypto enthusiasts see great potential in the future of Bitcoin, not least because Bitcoin has established itself as a symbol of financial independence. The Bitcoin forecast until 2030 also looks extremely promising. Undoubtedly, Bitcoin has experienced significant highs and lows in its short history. But should you buy Bitcoin in 2024 or not? Should you hold or sell Bitcoin? And are Bitcoin alternatives a better investment? So many questions that require an answer. Conclusion: the outlook is very mixed for various reasons. Predictions range from total loss to absolute financial freedom with an investment. One must be aware of the volatility. Additionally, it's important to understand that this is a highly speculative investment. If you want to buy Bitcoin now, only money that you could afford to lose should be used. Chart analysis has shown that up to 85% of the deposit can disappear very quickly in some cases. It may be advisable to use established investment strategies. If you want to trade the cryptocurrency Bitcoin, you can do so online, for example, on a so-called Bitcoin marketplace. Here's how it works in detail. On marketplaces, registered users post their offers to buy or sell Bitcoins with another currency, Buyers can see how many Bitcoins a seller is offering at what price. A transaction occurs when an offer is accepted by another user, the potential buyer. The purchase price for the acquired Bitcoins is transferred to the seller's bank account, and the buyer receives the purchased Bitcoins as digital data for their wallet. Depending on the marketplace, the operators may charge a small fee for the exchange, for depositing, or for withdrawing the money. Usually, this fee is relatively low. Buyers and sellers split the Bitcoin fees equally. If investors store their Bitcoin on an exchange, rather than in their own wallet, they do not have direct access to it. This is because the keys, a kind of access authorization to the held Bitcoin, are held by the respective exchange, not by the user themselves. This reflects a principle in the Bitcoin community: not your keys, not your coins. The bankruptcy of the cryptocurrency exchange FTX made it painfully clear to many investors that holding cryptocurrencies on online exchanges is risky. After the insolvency became known, the exchange halted trading and denied investors access to their wallets, a safer alternative to storing cryptocurrencies on an exchange are so-called cold wallets. Since its inception, Bitcoin has been making headlines. In recent years, it has experienced several true rallies, only to collapse again. Nevertheless, it has now become respectable among payment service providers and in investor circles. Personally, I still believe that Bitcoin, as well as other cryptocurrencies like Ethereum, are still good investments, and one can still make a considerable amount of money with them. However, how much exactly we will only see in the future.